Wes and Reg, what do you think? Do you want to get started?
Yeah, let's do it.
I'm good to go.
All right. Well, thank you everyone so much for joining us today for our webinar, Cyber Insurance in the Age of Cybercrime. We have an amazing panel here, a panel of two experts that are going to talk to you today about cyber insurance. And I first, before I introduce them to you, and you may know them, or at least Reg, as we go, we're so excited because this is really the first of our customer education series and our learning series that we are going to be doing much more of. A couple of the upcoming topics that you're going to be hearing about is going to be building an incident response capability, and we're going to have another webinar on protecting your financial transactions, avoiding wire fraud and business email compromise. So we're really excited. You know, in one of our missions is to continue to make sure that although we handle your cybersecurity needs, that you really are as educated as you can be on how you can protect yourself and your business, and really learning more in an easy to digest way. And so please look forward to more on that. And then with that, just Reg Harnish is CEO of OrbitalFire, and for those that don't know him, he is a well-known industry expert in cybersecurity, and has also previously been CEO and founder of Great Castle Cybersecurity and other companies. And Wes Spencer, VP Channel Chief of FifthWall Solutions. We're so lucky to have him with us, and as well as a cybersecurity expert and innovator. And please, if you aren't following both of them on LinkedIn, I highly suggest you do. Both Reg and Wes are putting out thought leadership around cybersecurity consistently, and is certainly well worth the follow and the watching. So with that, Reg, do you want to get started?
Great, thank you. Excuse me. I'm in a good mood today, a particularly good mood. I just found out that I have a large unused balance on my DoorDash account. So I know what I'm having for supper tonight. Wes, thanks for being here. Appreciate it. And thank you, Dana, for the introduction. I think from our perspective at OrbitalFire, as Dana mentioned, really important, our focus is on small businesses, and we feel like perhaps the cybersecurity industry hasn't done a great job translating these complex problems and solutions into language that small businesses, one, can understand, and two, make informed decisions about. So we're excited to be here, and we're looking forward to a continued, series of educational events. Well, let's talk about cyber insurance, something certainly that our customers, I will say, struggle with. I think that's a fair term. Certainly in the last few years, we've seen, a significant percentage of them canceled, or their policies, draining or shriveling up. And certainly the premiums have been increasing year over year. And it's created some frustration and some angst in our customer base. And I think partially it's because we haven't done a great job of educating on how the process works. But secondarily, the process is generally broken. I think, and what you'll hear from Wes today is that if you're engaged with, some of the major players, and I won't name them, that treating cyber insurance like flood insurance or, tornado insurance, major disaster, is really a losing strategy, because they're very different. We don't have the actuarial science. We don't really understand them the same way. We don't have the same reporting and data. So what we hope to do today is demystify a number of things. Really, why should you have it? And I'll talk a little bit about that. And then have Wes come in and talk more about the mechanics of, what should be in a good policy, what should be in a good, broker, carrier, underwriter, what are some of the gotchas, how do you avoid rejections and denials, and some of the other things that are really on the minds of most of our customers. To start though, OrbitalFire, we focus on two things, and we are prideful about the fact that we help small businesses do two things. And while we have many services, really it's about two things. One is defensibility, and the other is resilience. So defensibility really means that if a third party asks you about your cybersecurity program and you tell them they should be happy with it. They should say that's adequate, that's reasonable and appropriate, and we can work with you, or we won't penalize you, or we won't fire you. So defensibility is really important, often comes from things like compliance and other structural approaches to cybersecurity, but certainly cyber insurance can add to that. Many times now we're seeing contractual requirements where small businesses are mandated to carry a certain level of coverage and limits and things like that. But on the resilience side, cyber insurance is a critical player, and anyone who does any level of risk management knows that you remediate and mitigate risk up to the point where it's no longer feasible. And then at that point, you accept risk and you attempt to transfer it. Well, that transference is often done through a good cyber policy. And so it's become absolutely critical for small businesses today to have something that can help them in the event of the worst happening. And certainly in places where there's no amount of time, money, or energy is really going to address those cybersecurity risks. And so there enter insurance. But insurance policies are not created equal. Insurance carriers and underwriters are not created equal. And there's a lot to learn. So with that, I'm going to turn it over to Wes to get us a little more educated. And I'll stop in at the end here to kind of wrap things up. Wes?
Fantastic. Thanks, Reg. Reg, it's always good being on a webinar with you. It's been great to get to know you over the years and love what you're doing at OrbitalFire. So yeah, let's just jump ahead. So my role at FifthWall is just helping MSPs get through, or I'm sorry, helping clients of all sizes get through these hurdles in cyber insurance. Just like you said, Reg, it's a hard thing. And I think you really set the agenda really well here, Reg, of like the problems that we have. I think probably for most of you today, there's confusion, there's frustration, there's potentially even a bit of like fear and concern because this seems to be a very tumultuous time when it comes to cyber insurance. And I can't tell you how many stories I hear where someone's like, oh yeah, I had a policy last year that was, 2,000. The year before that, it was 1,000. And this year they want 8. It's like, what just happened here? And it's absolutely wild. So we're going to talk about all that, just like Reg said. We're going to talk about all the things you see here, what's happened, some of the things you need to be thinking about to be eligible, but I really also want to hone in on why this is so important, because I have dealt with in my years, I'm a lot like Reg. We're very similar to each other in that we're both cybersecurity people by trade. And I've worked with orgs of different sizes, from very small up to quite large, that have gone through breaches, and they are expensive, challenging things. And so we're gonna demystify that. So just so you know a little bit about who we are at FifthWall, all we do is cyber insurance. That's literally the only thing we touch. I think we even have some insurance folks on the call today. So what we do is we work with agents. We have it says 1,000. I think we're closer to 2,000 now. 700 MSPs, which are like other partners, like technology providers that we work with. But what we're doing is we're helping solve the cyber insurance problem. So where we exist in the insurance world, you have agents that you normally talk to when you're trying to like figure out, I need a policy for E&O, I need a policy for, hazard, for whatever it may be. Same with cyber. Then above that, you typically have brokers. Those agents are going to access the market through a broker. And then we're a level above that. We're what's called a wholesaler. Or a distributor. So what we do is we have direct access to the carrier marketplace. So we work with this says 40, I think we're at 43 carriers now. So we have pretty much global access. You name the carrier, we work with them, we talk to them, we have access to their underwriters. And so we are just embedded very, very deep in the cyber insurance marketplace. So no matter who you are, we're going to help in all of that. When we talk about cyber insurance, there's some pretty big things we want to talk about here. There's a lot of misinformation and confusion that comes along the way when it comes to cyber insurance. And Reg, you can probably jump into some of this too from conversations you've heard with folks, is that when you look at a good comprehensive cyber policy, these are the things that it covers. And there may be some things on here you're like, wait, time out, legal? Or, fraud response, or income loss, or PR, like public relations expenses. I didn't know these things were part of a policy, and why should they even be part of a cyber insurance in the first place? These are things that a lot of times small and mid-sized business look at and they say, what? I thought a breach was just, $10,000, $50,000 and off I go. Like, it's not really that damaging. But Reg, I want you to talk about this a little bit more. it's actually way more than that, isn't it? There's a lot more costs and challenges compacted into that. Any thoughts you have on that, Reg?
Well, I will say that everyone's familiar with Target. Target spent $4 million on postage, and I don't know how much they anticipated that. Now, obviously, the scale of the Target issue is significantly more than the folks that are here today. But I think the point is that, the world has become ones and zeros. And so when those are affected, it can really impact smaller organizations in ways that perhaps they hadn't really anticipated.
Yeah. Yeah. Well said. So these are the things that it gives coverage for. We're going to unpack this. Let's go ahead and move on. So now you kind of have a good idea of like what a good comprehensive cyber policy might look like. But let's talk about why we're even talking about this for just a minute, because I think if you were thinking about security in what I call the innocent days, pre-2018, it was pretty simple. If a small business was hit by something, it was like we said, Reg, you probably remember those days of a $10,000 ransomware attack. You pay 10,000 and you're back in business. It's really not a big deal. It's sort of like, well, I hope no one knows about that. Look, we had a little blip for an hour or two. We're good, right? That was the old days. And in those days, the cyber insurance carriers really saw this as a money-making opportunity with very, very little risk. They're looking at this and like, breaches aren't expensive. They typically only happen to the targets of the world, like you mentioned, Reg. And so if a small business wants a policy, yeah, we'll give it. So they were giving it to everybody. And underwriting was basically, when we say underwriting, it's like the processes that insurance go through to determine, are you a good risk for us? And so underwriting back then was simple. It was like, do you have a name? Do you have a business name? And can you fog a mirror? If you can do those three things, I got a policy for you, my friend. And that was how easy it was. Adoption was low, of course, but then what happened was, and Reg, I know you saw this coming too, we start to hit this era of 2018 and 2019, and all of a sudden SMBs start coming under attack like never before. Many people had IT providers, and these IT providers have full access to their client networks, and bad guys realized, you know what? If I can go after that IT provider and get access to their network, I could then get access to all of their clients. So in one fell swoop, a bad guy's like, I can hack and break in and run ransomware on 40, 50, 60 different clients immediately. I'm very interested in that. It's like, it's bad guys like water. They're going to go where the least resistance is. And they started to realize, I could go after a Bank of America, very hard, very complex, very expensive, very time consuming, or I could go after a whole swath of these small businesses. And it's like stealing candy from babies. And so that's what happened. And so all of a sudden, what you see is claims start going up. You see the damages start going up, costs going up. And all of a sudden, the carriers are like, wait just a minute. I don't think we signed up for this. What's going on here? We thought this was easy. We thought this was a good risk for us. And so then, as if that wasn't bad enough, it's like the world said, hold my proverbial cyber beer. And here's this thing called the pandemic. Pandemic rolls in and things get worse because now all these small businesses are not ready for a mobile workforce. And so they have remote connections in and they're not being secured very well. And it makes it even easier for these bad guys. And so we see a skyrocket. I'm going to show you some data in a minute that shows this, a skyrocketing of attacks just blows up the market. And so this is kind of where we're at right now, is sort of in the aftermath of a huge increase in the numbers of attacks against small businesses and a raise in the costs of these attacks. And so now the insurance carriers they're flailing. They're not doing well. Their loss ratios, which I'll explain more about what that is in a minute, but basically how profitable they are it's not doing well. And so they're thinking, well, what do we do to fix this problem? How do we address this? How do we have better underwriting? And we're going to have to charge more because this is expensive stuff. So this is where we're at right now. And I think it's important to know that history, because if you've ever wondered, why is this stuff so expensive? That's it right there. That's the exact reason. So maybe some news articles that you've seen. And, anytime you see something hit Wall Street Journal, oh boy, right? This means that everybody's reading this, business owners of all kinds. You saw what happened there with the Colonial Pipeline attack, people literally filling up gasoline in the beds and backs of their pickup trucks. I mean, wow, it really shows how a ransomware attack that's digital in nature has vast implications on skyrocketing gas prices and panic in the streets. And some of these other news articles, we're also seeing, Reg, if you go back one to that insurance journal, that's an interesting one here, because what happened is what we're also seeing the carriers do is they're starting to say enough is enough. they're starting to say things like, look, when we're going through this underwriting process, you have to be truthful with us. And yes, I know that you have these 8, 9, 10-page questionnaires that are like very complex and very confusing and very difficult, but you better tell us the truth. Here's an example where this is Travelers. They're a really good insurance carrier. They're basically coming after one of their clients because there's this thing called multi-factor authentication. Reg has probably talked to a lot of you guys about this. It's where you get a code to your phone when you're trying to log into something. It's a very important security control. And in this case, the client said, yeah, we got multi-factor. Yeah, we're good. We've rolled it out. Well, they had a breach. The aftermath of the breach showed two things. If they had had multi-factor, it probably would have stopped this attack. And two, they didn't have it. They misrepresented. That's called lying. And so now Travelers has said enough is enough. We're not paying. We're not in the business of paying when people don't tell us the truth when we're trying to underwrite them. And so this is kind of a wild world that we see here. We're going to come a little bit deeper into this one. Dana mentioned at the beginning that you guys are going to do a talk on like business email compromise. Please go to that one. That is, we talk about ransomware all the time, but hear me. Business email compromise is higher in volume and overall damages is higher. So you really got to go to that next one that OrbitalFire is doing. And this is an example. So this is like a computer, like a fix-it store, a whole bunch of like those series of stores, like an iFixit, one of those kind of things. And they had a business email compromise attack. Basically, a bad guy gets into their email, he's watching and waiting, and then he waits for the right time to strike, and he gets them to wire out $600,000 just like that. Money's gone. So they make a claim, and this is Travelers again, ironically. They go to Travelers and like, hey, we have this cyber claim, business email compromise. Travelers like, okay, but it's covered, so we'll help you. And so as they start going through it, Travelers eventually writes them a check for their lost money. It's only $100,000. And the computer store says, time out. Wait. We have $1 million policy. The cost was 600,000. You only give us 100. You have 500 you owe us. And Travelers is like, no, we don't. It's disclosed right here clearly in the policy. You have what's called a sublimit on social engineering attacks at 100,000. Because this was a social engineering attack, we only are going to pay you 100,000. It doesn't matter that you have a limit of $1 million. You have a sublimit here. The computer store said that's not right. So they sue Travelers. Within 1 week, the judge throws the lawsuit out with what's called prejudice. Basically, nope, this is cut and dry. The judge said this. You clearly had a sublimit. It wasn't even hidden in the terms. It was very clear. You didn't read the policy. That's on you. So sorry, but Travelers did the right thing. So just we can move on. That kind of shows where we're at right now in this market. Look at the data. I'm only going to focus on two quick things here because there's a lot. This all comes from Fitch ratings. Next month, the new ratings come out. So I'm very interested to see this. But do you see the very far left graph and even the middle one? You see this hockey stick growth? That's the cost of insurance. It's what we call premiums. It's how much you pay. And these that you see here, especially that middle one, are all, it's quarter over quarter. So really, if you want to get an idea of year over year, pick one and then jump ahead 4, and then there's the next one. Do you see how it's more than doubling year over year? It's gone bananas. It's gone crazy. Now, one of the reasons it's going so high is because it's expensive. Like we said, there's a lot more of these attacks happening and they're getting more expensive. So because of that, the insurance market just looks at this and says, it's not as cheap as we thought it was. And so I like to say, it's not that it's getting more expensive. It's actually that it's normalizing into what it always should have cost, because breaches are not cheap. Now, the other thing I'll show this to you right here, if we can go back super quick, Reg, is you see that red line on the left? Those are the loss ratios I talked about before. So think about it this way. For every dollar that goes in, how much of it do we lose? So if in a good insurance market, just take auto, 15% loss ratios are really good. Do you see what we see? We're at about 63% loss ratios. This is not only egregiously bad, it is unprofitable. So as long as we have these high loss ratios, you see how those loss ratios went down for a little bit, but then they went up when I talked about through that 2018, 19, 20 attacks and all that stuff happening, those loss ratios skyrocketed, which means insurance goes up and up and up. So now you know why this market is so backwards and why it's so darn expensive. This is what's going on. By the way, if you have questions, we got the Q&A panel, just pop a question in at any point. We'd be happy to answer. So now that we kind of understand that, one of the things you want to know is we're in all this means is we're in a hard market. A hard market just means this: when there's not as much access and it's really expensive, it's hard, right? A soft market would be something that there's not. Let me give you an example. A soft market might be maybe musicians and maybe their arms. I'm insuring my arms because I'm a musician. Well, how many musicians have their arms attacked in a debilitating way they can never play music again? Probably not very often. So it's easy to get it. It's usually not too expensive, that sort of thing. Well, in the cyber world, we're in a super hard market because attacks are going crazy and it's very expensive. So that's kind of, just know that when we say we're in a hard market, that's what we mean by this. And eventually we might get out of it, but boy, I'm not optimistic that the next year or two is going to make things, we're just going to solve the problems. All right. And it is knee jerks, joking, knee jerky. It's very knee jerky, right? Like what happens with the carriers is, here's how the carriers operate. Oh, we saw this over here, so we're going to do that. We saw the pendulum go this way, we're going to pull it back over here. That's how the carriers work. Everything is knee-jerk in terms of how they act and how they react. And so we just have to be prepared for that. What happened last year is not necessarily what they're going to look at this year. Some of the things they didn't ask for this year, they might start asking you to do these things to be eligible. It's just very knee-jerk. Okay, so we also had talked about insurance being part of resilience. So the federal government talks a lot about this idea of like cyber resilience. It's basically this idea here. At some point, something bad is going to happen to your organization. I wish we could say it would never happen, but we all know, you read the news articles. We know breaches happen all the time. It's not a question of if a cyber breach is going to happen to you. It's just a question of when. It's not a defeatist mentality. It's a realist mentality. And so because of that, your job as a business owner and as a risk manager is to think through, when that happens, what would we do? When that happens, how do we stay resilient? How do we stay operational? We may not be as operational when stuff hits the fan, but we can be better than nothing, right? And that's the whole idea here. Insurance has a part to play in that. And we'll kind of elaborate that as we go on. Okay. But that's really what we're really focused on, is keeping things operational, keeping things going. And these are questions that you can talk to Reg about and the OrbitalFire team. If you're like, I just want to have a conversation of like, what do we need to have in place to make sure we can stay operational? Because I'm not sure. Those are questions that OrbitalFire can do. That's literally what they're focused on. They're focused on cybersecurity, focused on that resilience. Reg, anything you want to add to that?
No, I agree. We're here to help.
Okay. So a few scenarios. I'm not going to go in depth into any of these. We can give you the slides later if you want to see some of these scenarios, but I just want to give you some examples of where cyber insurance plays in, because these are things that are real life scenarios, right? So this first one that you see here, right? An employee of yours accidentally sends some kind of, they call it viruses. I know in this day and age, we call it malware or other things, but in the insurance world, they just still call it a virus to a customer. So they got something accidentally. They didn't know that their computer is infected by something. They accidentally send something that causes that infection to go to somebody else. And all told, and the damages of that thing cost more than $3 million. That's something that cyber insurance would cover. So it covers some of those inadvertent mistakes that your folks make. Maybe an email that came in, right, from a vendor of yours that you receive. And it does some kind of like, wire fraud. Like they're in your email, they're trying to convince you to change a wire and a payment somewhere else. Now, again, the next webinar is going to cover that, but those are things that cyber insurance cover. So it's important to remember that, or we'll skip the last one. These are just examples of scenarios that you should just be aware of. These are things that happen all the time. One of the big ones I want to pick out here, actually I want to pick out the last two here. One is reputational damage. One thing that companies never really do a good job thinking through, and I can just say this as a cybersecurity practitioner, is what does the reputational damage look like? What happens when you have a mass systemic event and you're out? You can't operate. You're not making revenue. Here's what happens. Your own clients are like, hello, we need your services. Where are you? Take a manufacturer. Let's say you make something that someone else uses in a supply chain and you're not producing it. And now your clients are like, I need that. If you don't have this for me in this just-in-time world of supply chain, I'm not making money. And in the aftermath of the breach, they come back to you and say, so why are we doing business with you again when you got hit with something? I'll give you an example of this. I have a good friend that went through a big ransomware attack. This is over a year ago. And he told me, he said, Wes, I just lost another client. It took a year, but when I met with them again, they said, hey, we're terminating our relationship with you. And they said, we really like you. We didn't want to, but our own suppliers, because they were affected as we were affected, as you were affected, said, you're going to terminate the relationship with that client of yours. And so we are. And they said, we're really sorry, but we're being forced to do it because they're our biggest supplier, our client. So those are things we just don't think about. What does that look like for that reputational damage? And then disruption. Here's a good, easy way to look at disruption. The average downtime for a small to mid-sized business with ransomware is somewhere around 16 days. So if you just want to calculate only the outage time, the revenue loss, take your monthly revenue and slash it in half. That's just an easy average way to get some idea of just the disruption cost. But imagine it's not like snap of a finger, everything's operational again. It takes days, if not weeks, for everything to get operational fully. So these are things we got to think about. And look at the breach itself. This is a very important part too. And I really want you to focus on this one as well. Is there's a lot more to a breach than meets the eye. I hinted at this before, but I want to tackle this a little bit more. Once you realize that you have something nasty that happens, whether it's you come into the office and everything's encrypted and you got the skull and crossbones kind of thing, or you're rectifying an account and all of a sudden you've got $300,000 in a wire that went out that you have no idea who that went to. Those kinds of things, as soon as that happens, here's what happens is a lot of times legal has to get involved, because we now have state regulations around privacy notification. Who was impacted? What level of access did they get? When did they have it? How much of it did they have? Do you have literally state attorney generals barking down your door trying to figure these things out? And then you have digital forensics that comes in. The forensics folks are the ones that answer those questions. What happened? Is the bad guy gone? Have we evicted them out? Are they still in the network? Like that old 1970s Slayer movie, slasher movie, the calls coming from inside your house, that kind of thing. And then we have notification costs, public relations, credit monitoring, fraud responses. These are things that actually happen in these big events. And a lot of small businesses are like, you got to be kidding me. Really? And the answer is yes. You talk to a lot of businesses, they have staggering amounts of client data. And that client data is valuable and it's protected under state privacy laws. So these are things that cause a breach to just go gangbusters. Reg, anything that stands out to you so far? I just want to make sure you had a chance in case anything's going through your brain.
Well, I think in addition to possibly underestimating the kinds of activities and impact is misunderstanding what some of those third-party players like the FBI, for example, that's a real common one where we see small organizations say or believe that once they make contact with the FBI will show up, run, antivirus on their computers, get everything back and working, and then go arrest the bad guy. But it's not like that. And I think once you have been sort of that fluid, been through a response, it's very fluid, very organic, dynamic, and a lot of it is unexpected.
Yep. Well said. And, to that point, a lot of these adversaries we're talking about, they're not your neighborhood criminal. They are operating out of places like Russia. In fact, the new cybersecurity national strategy by President Biden's White House just got released last week. And they called out some threat adversaries. The main ones are China, Russia, North Korea, and then like these vigilante groups that are operating in those countries. They're not really operating under Chinese military, but they're operating in China. And so what happens is those countries are more than happy for their people to attack us. And they look the other way because they know the money is coming back to their country. So, oops, we didn't know. Sorry, we were looking the other way. We're not coming after them. That's the challenge that we have is with those bad guys. That's exactly right. So here is an example of a good insurance policy. Now, you do not have to understand every one of these line items. And if you're someone that wants to, reach out to us. We'll talk to you. Or if you have an agent and the agent knows cyber well, they can talk to you about these things. But this is an example of a comprehensive policy. And there's just a few things I want to pull out of this. So first of all, in this example, this is $1 million total coverage, right? So the aggregate limit is what we call this is $1 million. So in other words, if you were to have a claim, the most that's going to be paid is $1 million. But you see how there's a whole bunch of these like 1 million line items. each of those line items are limited to the total aggregate. So I'll give you an example. Let's say just some crazy example where the extortion loss and ransomware, the first one in green, cost $1 million itself. Well, that hits your limit and that's it. If you have more costs in any other bucket, you hit your limit, you hit the total maximum, you're done. So you see how that works? There's a whole bunch of these things that kind of go in. So when you say, oh, I have $1 million, it sounds like a lot, but there can be a lot of things that come into a breach that you might not have considered. So that brings up this question that's probably the most common one we get. Well, how much coverage do I need? And the answer to that question is it's not for me to say on a webinar. You need to talk to your insurance professional. We can help you with that. Or if you have an agent, they can help you with that. And we can work through that, but it depends on your industry. It depends on your revenue. It depends on your risk tolerances. So you can get the answer to the question, but you're not going to hear me just say, well, every company needs 1 million or 3 million or some number like that. I wish it were that easy, but you can't. I will say less than $1 million is probably not a good idea. But you need to have a conversation to figure that out. One other super quick thing on that too, Reg, if we can go back, is the ones on the bottom, those kind of reddish, burnt orangey, whatever that color is, those are called sublimits. And those are the ones you want to pay attention to, because those are the ones where, remember we talked about that computer store that only had 100,000 in coverage, even though they had a $600,000 business email compromise. Those are the ones you want to take a peek at and make sure you're comfortable. So in this case, really the social engineering is the one that's most important in most cases. So that's, in this example, it's limited to 250,000. So here's the question you have to ask is, am I comfortable with that? If I had business email compromise and it was under, as long as it's under 250, I'm going to be okay. Am I comfortable with that? What happens if it's 500K? So those are questions you got to ask. You might talk to your bank. You might make sure that you have good accounts payable processes so you don't run afoul of something happening, right? And you definitely need to attend the OrbitalFire webinar event on that one too. So there we go. We can move on now. So you got to know those things. The other thing you got to know, and this is a doozy, but it's an easy one, is there is a difference in cyber insurance. So a lot of times, let me pick on agents for just a minute. There are some phenomenal agents that are out there, just A+ agents, but there are also agents that don't understand cybersecurity very well. And they just don't, like we've said, they could never imagine that a breach could cost a lot of money. And so sometimes a client might come to an agent and they say, hey, I need cyber insurance. They say, great, I'm just going to tack on this warranty thing into your general liability policy and you're good to go. And the thing is, those things have so many exclusions and gotchas, and they typically are going to be limits of 100K. They're not designed to pay out. So you want to steer clear of those because they're not designed to pay out. They're low in their limits and low in coverage. They're just not good versus a comprehensive policy. So here's a good way this is a way to explain it. If you're a small business today and you're like, well, I don't know which one I have, you probably don't have a standalone policy because standalone policies are not cheap. And you do have to go through a lot of rigorous questions to get to the answer. So if you have an agent, just go back and tell the agent, hey, do you know which of the two it is? Because I really want a standalone policy. And then the agent can kind of figure that out. So sometimes agents, it's not that agents are trying to do the wrong thing. It's just that sometimes they don't know. And so it could be your job, and Reg can help you with this, right? But you want to go through and just make sure you have a comprehensive policy and that you have all the things in place. That's what's important here. Okay, so Reg, I want you to help me with these. These are the big 5 important controls. So you ever gone to the theme parks, with your little kid, and they try to go up to the ride and they're in the yellow or the red, they're not tall enough to ride, and they walk away so sad. It's like, well, maybe next year, little fella, you'll be a little bit bigger and you can go. I just got through that. My kids are younger, but they've now all hit the green level. So they're all like, every time I live in Tampa, so we go to Busch Gardens all the time. And, they love it because every ride is now open for my whole family. We're finally this age of bliss. I don't have to deal with tears because they didn't make it. Well, let's not have the cyber tears. You have to be this tall to ride to get eligible for cyber insurance coverage. So what we've done is, because we work with about 43 carriers, we know the minimums. The minimums are the things that they say, you got to have these things in place to be eligible. And if you don't, then you present too much of a risk to us, and we're either not going to give you coverage or we're going to sublimit down our damages. So we talked about before, because you're too much of a risk. So these are the 5. Reg, I want you to start. You want to, which ones do you want to tackle? I'm going to leave it up to you, my friend.
Well, I think one of the points that we try to get across is often that while the cyber insurance industry is a bit of chaotic right now, and I would say free fall in some places, more and more we're seeing that your your investment in risk management and risk reduction results in a not necessarily just a more affordable policy, but a more effective policy. And so while these 5, I would agree, pretty much show up on every application everywhere, I think, you know, especially some of the next gen insured techs, like they're getting smarter about verifying which controls you have in place, even if oftentimes their scans, we've all, you know, a lot of us have been through these, are not exactly 100% accurate. The point is that it's happening and that they are doing verification. And I expect this list to go to 10 or 15 in the next year or two. But, you know, for us, obviously, we are not a technology provider. And so things like multi-factor, while we may be encouraging our customers to implement that, it's not something that we provide. But certainly numbers 4 and 5 are things that we do and we are doing for the vast majority of our current customers, which is helping manage vulnerabilities and then doing something about workforce behaviors, right? Training, educating, testing, building culture around that. And certainly we expect, and one of the reasons that we partner with FifthWall is that they understand this mechanism where if you do more in cyber, you pay less because you've managed your residual risk down to a smaller level. And I think for us, that's really the important point. Those two things are linked.
Yep. Well said. You know, we can make analogy after analogy. Do you think you're going to, you know, if you have a car that, you know, can't lock the doors and has no seat belts and was made before, you know, all the new safety regulations on the frames are out there, it's difficult for a carrier to say, yeah, I'm okay with giving you an auto policy because this presents a lot of risk to us versus if you have, you know, a car with all those safety features and the etched glass and the tracking features and all these kinds of things. And the carrier says, this is lower risk to us. Same way in cyber, no different. So these are the 5 things you got to have in place. If you have questions on any of them, let us know. Maybe I'll just, so since you mentioned the 4 and 5, we've talked about multi-factor, so you get the code. The backups are a big deal because the carriers want to know if you were to have a ransomware event, we want to know that you have backups of your data and we can get those back. It's not just as simple as, oh, a quick backup though. They call this immutable and offsite. So they want to make sure it's somewhere that a bad guy can't get access to, that nobody can delete them. And then this whole EDR thing, endpoint detection response, think of it as like a home alarm system for your network, right? So it's like looking for activities on computers that could point out a sign of something bad happening. So these are the 5 they want to see. And Reg, you nailed it. These are not, don't expect this to be the final 5. You'll see more and more. And I will also tell you this, if you go above $1 million and you need like maybe 3 million in coverage or 5 million in coverage, the minimums go up even higher. Because again, the carrier's like, well, we're extending more risk instead of, you know, us being limited to $1 million. Now you want us to go to 2 million, 3 million, 5 million. That's a lot more money that we might pay out. You got to do more things in place. And here's the unfortunate nature of everything. Is a lot of times the stakes are being changed. Let me give you an example from autos. Toyota now requires all of their local Toyota dealers to carry 5 million in cyber insurance coverage. Isn't that wild? That's what they mandate. So if you want to be a Toyota dealer, you're going to have 5 million in coverage, buddy. That's the end of the story. So I can't tell you how many Toyota dealerships I've talked to, and they're trying to go through this whole thing. And it's not just these 5, it's a bunch of other things that got to have in place as well. So this is the world we're in. And, you know, we're seeing upmarket suppliers go down market to their SMBs and say, you got to have 1 million or 3 million or whatever the number is. And so just got to be ready for those things.
Yeah. And I love the auto analogy because I think not only does it help explain why a seatbelt might result in a lower auto policy premium, but also when we think about the evolution of that market, I remember when seatbelts were really introduced, I'm dating myself here, but you know, not everyone was using seatbelts right away. It's not like all of America just started, you know, buckling up. It took a while. I don't know, maybe it took 10 years for everyone to kind of get used to, but that's kind of the evolution and the mechanism that we're in right now, which is smaller businesses are kind of wading into cybersecurity. They're being forced to because they see the police officer and they know they're going to get a ticket if they don't click it, you know, these kinds of things. But over time, it's like no one thinks about buckling up anymore. You just do it. And because it makes sense and everyone has seen the value of this, the data is there, but also it's something that you just kind of get used to. Like putting a seatbelt on is sort of a cost of doing business. If you want to drive, you just put a seatbelt on. but it gets easier over time. And while this list may look onerous right now, and some lists are much worse and longer, I think what we're learning is that the data is there to support this, and no amount of cyber insurance is going to eliminate the disruption you went through, or it's not going to get back your reputation. It's not. So buckling up just makes sense sometimes. I mean, I don't even think about it anymore. And I think that's a good analogy to help people understand how this is probably going to go.
Well said. Really, really well said. We can skip by this one, other than you just want to talk to your agent about cyber insurance, right? You just want to say, can we talk about this? What do we know? What can you answer for me? And if we can help you, Reg, we're happy to work with you as well through all of this. We work with clients of all sizes all the time, from really big, massive ones down to the smallest. So just let us know about that. Okay, let's talk about the future a little bit as well. And by the way, we're going to have time for questions. So please let us know. Start firing away a question. If you got one, be glad to answer literally anything you have around this. So one is data. So insurance carriers have always been about data, right? I mean, they can tell you if you drive this car and you're this gender, you drive this many miles in this location, they can tell you exactly how much you cost to them according to their actuary tables. They have endless amounts of data. Well, when they look at the cyber market, they're like, wait, what? They don't even know what data to measure at this point. They're still figuring this out. And cyber is just drastically changing. It's not like flood insurance. We're like, well, look, every 100 years, you're going to have a flood of this size. So we can just plan for that and build our cost model. Nope. Cyber is like, man, no one saw this thing coming, right? And maybe in the heels of it, a month later, another big thing happens. And so cyber is just a lot different. So the carriers are trying to get their hands around this. And so what you're going to see around this is, I'll give you an example, is you get these questionnaires from the carriers, and wouldn't you know it, remember how we just said those 5 controls are the ones you need, but they ask about 30 more questions that are on there. And so here's the secret. A lot of those questions are data gathering. They're just trying to figure this out. So in the aftermath of all their claims, they go back through history and they say, well, here's the remember we said they're knee jerk. They didn't have this. They didn't have this. Whoa, there's a big commonality. We say 80% don't have this one thing. We better knee jerk and require it. That's what's happening right now. So they're really trying to get into this to get more data. Another thing that they're doing, and you may have seen this, I'll pick a couple. Coalition does this. There's a few carriers that are out there. When you try to go through to get a policy, they actually scan your network from the outside. And they're kind of annoying, to be honest with you, because they typically just scan only the outside of the network. And sometimes, like a lot of small business, like it's a shared web hoster or something, and it comes back with a lot of weird, bad results. And then the carrier comes back and says, whoa, look at all these like red alarm bells here. And they're like, we're not giving you coverage. And then we jump in and we're like, wait, time out. This is not even right. This whole scan is wrong. And you're not even scanning the inside of the network, which is where all the assets are. So they're trying to fix this problem. It's just going to take some time before they really, really get there. And then this last thing that you see here as well is, we mentioned this before, if you need more than 3 million, it's difficult. You can still get it, but it's difficult. So we call this syndication. So what'll happen is we stack carriers on top of each other. And I won't get into the details on that. Just know if you need to have some like more than 1 million, it gets complex. Reach out to us. We'll help you in the journey. Just know it's not cheap, and just know that it's a lot of extra work you have to do, but it is what it is. And then the other thing here is this whole acts of war. Oh boy, this is a big one. And I'll say just a few things about this. So one of the big carriers, Lloyd's of London, out of, you guessed it, London, has put a new clause in there and really just sort of redefined it. And they basically said, look, if you have a claim for a cyber attack and it's part of an act of war, we're not going to pay. That may sound alarming at first, but it's the same way. If you go look in your homeowner's policy, basically says the same thing. Look, if like North Korea flies over and drops a bomb on your house, we're not paying for that. They're not going to pay. It's very standard in cyber insurance that acts of war for any kind, for any line of insurance, is not going to be covered. But it brings up that question that we had from before. Well, what is an act of war and what isn't? And we're starting to see, as we mentioned, all these countries coming after us. Is that an act of war? Is it not? I'll just say this right now. No, it's not. But if you look at what's happening in the conflict in Ukraine, we're seeing cyber war go alongside of physical kinetic war. If you look, the average number of attacks against Ukraine have gone up about 200 to 300%. So we're seeing that combination. So I think what the carriers are saying is this. We worry if we ever get to like another big war, let's hope that we don't, that cyber warfare comes with it. You're going to be that's a different world. That's what they're focused on. So I don't think you have to worry about that yet. Just know that we're starting to see, looking at the lens of the Ukrainian conflict, cyber war will always now be in concert with physical kinetic war. And we're just going to have to be ready for that. But that's a conversation for another day. So there you have it. That's like really the future, right? That's where things are going. And the one more thing I would point to is just be ready for the fact that this whole cyber thing is not settled yet. The carriers don't have all the answers. The carriers have made a lot of mistakes, if I can be honest, but they're getting better. And it's year over year, it's going to get a little bit better. It's going to get a little bit more understandable. And eventually we're going to see a cost. We're going to see us start to hit a limit where the carriers are finding like, okay, the loss ratios are coming down and we're kind of getting to a neutral level of equilibrium, but we're not there yet. So that's kind of where the future is right now. We talked about data. Data is king. Expect more data. Expect to have to give carriers more answers. Expect the carriers to ask you more questions. I know it's annoying, but the more they get, the better off they get making their decisions. So you're just going to have to get comfortable with this for now. It's just sort of the way of the world. And then sublimits. We talked about sublimits already, but I'm just come back to it because I'm telling you, my friends, it's really important. Go back and review your sublimits. Make sure that you understand them and make sure that they are commensurate with your level of risk. You just have to make that call. Am I okay with 100,000? Am I not? We talked about acts of war, so we'll skip this one too. Acts of war is a really big one. So just some summary items here. We do know volume is still going to continue to go up. We're in a bit of a reprieve right now because a lot of the Russian threat operators are focused on Ukraine right now, but that's going to pick up, unfortunately. So we need to be ready for that. Cyber insurance is a big part of your recovery costs. Remember, we showed a breach and kind of what it looks like, all those things that get stacked into it. It's a big piece of that. Not all policies are equal. You got to talk to your agent. You got to make sure you have the right thing in place. We can help you with that. Reach out to us if you would like. We'll do that with our folks at OrbitalFire. Will help you with that. And then this is a big one. We haven't talked about this one yet. You really need to get in advance of this. I'll give you an example. I was talking, it was a car dealer. It was me, it was the car dealer and the IT person. And they were trying to apply for coverage with Beasley. They had Beasley as a carrier before. Beasley's great. We love Beasley. Beasley last year was fine. They made no changes. They had no claims. And this year, Beasley looked at the same application and said, nope, rejected. And they're like, what happened? So I'm looking through their application and I'm basically having to call their baby ugly. Remember those big 5 things we talked about? They were missing 3 of them. And I just had to explain, hey, you don't have this and you don't have that. You're just way too risky for Beasley or for any carrier. And so the CEO of the car dealership, who's notoriously stingy, is like, well, they didn't have a problem with it last year. I'm like, well, last year, they didn't have as many damages as this year. And so they're just the line in the sand's going up. He's like, okay. He's like, well, could I get an extension for 3 months? Could I do that? He's trying to sweet talk. I'm like, nope. I'm like, it doesn't work that way. Carriers nope. It's too much risk. He goes, okay, figured you'd say that. So he said, we're going to make these changes. We're going to get them going. We have to, we have to. And I'm sorry this has happened. And so these things happen. So you can avoid that by getting in front of this 2 to 3 months in advance. When you know your renewal's coming up in July, you might want to back into April and start the discussions. Get a copy of the policy, the application, and start working on it. It'll just go a long way. And just know the carriers are changing the game. And they're going to continue to change the game until we hit equilibrium. We're in a hard market. This is where we're at this point in time. And then again, here's 2 things that'll happen. This is a big question people ask all the time. Okay, you mentioned the 5 controls, Wes, but like what happens if I don't have, are they really going to deny me? 2 things will typically happen. They'll either deny you or they'll sublimit you down. I'll give you an example of this. We talked to one client, they had 4 of the controls. They didn't have a 5th. The 5th was the EDR one, the sort of the alarm system for your network that I mentioned before. And so here's what the carrier did. They said, okay, we're going to give you coverage for $1 million, but if you have a ransomware attack, we're only going to pay $250K maximum. That's it. And so I told the client, I'm like, business email compromise and ransomware. Those are the 2 things you got to work through. Those are the 2 threats. So you telling me you don't want to put EDR in because you don't think it's that important and you only have $250K for the maximum, and the average ransomware attack when you add everything up is $1 million. Really? And they're like, well, we hadn't thought about it that way before. I'm like, you're really rolling the dice here in a really bad way. And they're like, yeah, I guess that makes sense. And the cost for EDR in their case was only a few $1,000s. It wasn't all that expensive. And so once they're like, oh, I didn't know that. I hadn't thought through it that way. They're like, well, that's an easy decision. So that's typically what carriers are going to do. They're going to sublimit their damages down, or they're just going to reject you. And so those are why those controls matter, because they're the ones that are carrying the risk, and they want to set the minimum thresholds. Reg,
Yeah,
thoughts?
awesome. You hit on two important things. One is getting in front of this. We are rolling out a program with all of our customers where typically 45 days in advance, if we haven't already had a conversation about cyber insurance with you, expect us to bring it up. We will be asking those questions around when is your renewal, who's your carrier, what's your premium policy look like today, your coverages, because we want to help. We have a couple. I mean, FifthWall is by far the most, I'll say, productive partner of ours. We have one other that is local, because I know some folks want to work with local agencies and brokers. But a significant percentage of our customers have already switched to FifthWall. OrbitalFire ourselves has switched, and we are now using FifthWall as well. So if you're within 30, 60 days of that next renewal, let's talk. Let's at least have a conversation. It can't hurt. It's free. And wouldn't it be nice to have another option and someone who really understands residual risk, which is my second point. So when Wes mentioned this idea of sort of managing a residual risk to a point, that may sound like voodoo to many of you, and we're here to help. So if you are engaged with us and we are conducting assessments for you, we're pretty good at this. There's no magic formula and there's no silver bullet. So you're never going to get to the point where you can specifically quantify residual risk, but there is something called a qualified assessment where we have a general sense that your residual risk fits into this. The benefit of that is that now you can shop policies and carriers and underwriters and premiums and all sorts of stuff, knowing what is it that you have to protect. So all the things that Wes has just kind of gone through should give you a sense of what are the 3 to 5 things that I really need to start thinking about before I go to either apply or renew my cyber insurance. And how do I negotiate? How do I find a good carrier, a good provider for my business? Because I'm looking for, perhaps higher coverages in ransomware than wire fraud, because I don't conduct financial transactions, for example. The more you know your business, the more you understand your residual risk, the better of a position you are in to find a good policy that's effective for you. Because the worst thing is to go say yes, 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 get a policy, and then when there's a crisis and you go to claim, they abandon you because either one, it wasn't truthful, or two, you really didn't understand what it is you were getting into. And we really want to help you avoid negative surprises like that. So please, again, if you're within like 30, 60 days of your renewal, please, contact your customer success specialist. It's a free conversation for you. We will introduce you to FifthWall. And the worst thing that could happen is, I don't know. I guess there's no downside to this, honestly. So thank you, Wes. I think we're ready for questions. And encourage you to, really, as Wes said, this is an open, honest conversation here. It's all customers for the most part. So ask away. You don't have to disclose who you are, and we'll do our best. If you do think of something after the webinar, first, it's going to be recorded, and we'll get the recording link out to all of you. But please let us know, support@orbitalfire.com, or contact your customer success specialist, and we'll do our best to get some answers for you.
Yep. Christine checking in. Thanks for an awesome session. Very informative.
Thank you, Christine.
Appreciate that. Yeah.
And we'll give people a minute here to formulate their thoughts. But first of all, I want to say thank you to Wes. FifthWall has become an incredible partner for us. We literally don't even talk to anyone else unless someone wants to work. We have a very good local provider as well. But we are super excited. you know, being on the cybersecurity side of this coin, it's been frustrating for 10, 15 years watching some of the major carriers stumble into cyber and treat it inappropriately, take a bath, and then make their insureds, you know, pay the price for their miscalculation. So it's been frustrating for us because we want to see a better correlation between your investment in cybersecurity and your premium specifically. But there's a lot of other things to it, you know, and that, again, that's a conversation. We have many customers who have these contractual requirements to carry 5 million. It's an 8-person technology provider who doesn't take custody of your EPHI. How could you possibly expect them to carry 5 million? One, it's almost inachievable today, but two, they couldn't possibly introduce that kind of risk to their clients. So we will advocate for you in those conversations as well, especially if you've engaged us for like vCISO type work where we are your cybersecurity team and we are your chief information security officer. We will absolutely advocate and have those conversations with your customers, your broker, your agent, anyone that's involved in this. Looks like we are shy on questions, which we're not going to twist anyone's arm, but and good morning, Tim. But we appreciate this. I'm going to turn it back over to Dana, but again, encourage you as we start to launch our customer education series. We're going to continue to do workshops like this on very specific topics, whether it's incident response or, you know, avoiding wire fraud or, you know, building a culture of security at your organization. We're going to continue to do this probably every 2 months or so, and we'll get that out to you. And that's all I have. Back to you, Dana.
Thanks so much, Reg, and Wes. Thank you so much for joining
welcome.
us. This is really wonderful. And, you know, just to echo what Reg said, you know, this customer education series, please watch out for kind of the next ones in our series. And we would love feedback about this. And if you have any questions that you think of after the fact, we are always here for you. Support at orbitalfire.com, or as Reg said, contact your customer service rep. And we'd be happy to, you know, walk, you know, step by step with you and make sure that you're really comfortable as we're all figuring this out together, and have experts like Wes to help us. So thank you so much. I will be sending out the link so you could review this if you'd like afterwards. And we look forward to seeing you again on the next one.
Have a great day, everyone.
Thanks so much.
Thank you.
Take care. Bye.